We have an interview with Haseeb from Dragonfly Capital. They manage billions of dollars in crypto. They're a top tier crypto VC fund, and we're grateful for Haseeb to come on the podcast to talk about a VC crypto market update, the WorldCoin and Say token launches, where retail crypto demand is currently at, strategies for crypto companies and companies in their portfolio, what is the biggest opportunity for crypto right now, and also how financial markets can utilize crypto. We hope you enjoy this podcast. If you'd like more thought leadership and insights from leaders like Dragonfly Capital, please subscribe to our channel where we share these valuable thoughts to help you and your company grow. Thanks.
Yeah, so I'm Haseeb. I am one of the managing partners at Dragonfly, which is a global crypto fund. We manage a couple $1 billion in AUM, and we invest up and down the crypto stack from early stage to late stage.
So fill us in on the market cycle, where we're at, some of these token releases, retail appetite, all of the above.
Yes, so it's been an interesting year. Obviously, this year kind of started with the gloominess of the post FTX hangover that the industry was suffering from. And then this year, despite the fact there's been a lot of regulatory incursions and a lot of fear about, oh my God, is crypto going to get banned? Is there going to be such an intense backlash, especially in the US, that makes crypto no longer viable on a global stage? Despite all of those fears that have been warranted from the actions of the SEC, crypto prices have actually been really strong. We've seen this broad rebound in, Bitcoin. Bitcoin's back at, almost 29K, Ether almost 1,800. We're basically back at prices that we saw last summer when Three Arrows blew up. And interest rates in that same period of time went from roughly 1% all the way up to north of 5%. So that tells us that the floor for these assets and the underlying demand and the underlying belief in these assets is very widespread at this point. And you see all sorts of corporates like, the BlackRocks of the world, the Goldmans of the world, showing that they're convicted in the space. They're not going away, even at a time when it might seem relatively unfashionable, volumes might be lower, the retail frenzy has died off. But institutions, by and large, and then of course a lot of non-US retail base, really believe in this stuff and don't think it's going away. So that's one side of the story. Now, the other side of the story is that, as I mentioned, volumes have been very low. Retail engagement is at a nadir. If you look at on-chain activity, there are fewer people trading NFTs. There's fewer people using DeFi. Some of the crazy numbers we were seeing in some of these crypto games, a lot of them have fallen off. And so you're seeing less retail engagement. You're seeing less excitement. You're seeing less of the crazy casino that we were seeing last year. And that's slowing everything down. It's making it harder for startups to really gain a lot of traction and get a lot of users. You're seeing the same thing on the capital markets. So, valuations are down. We're seeing fewer fundings, definitely fewer mega rounds. There have been very few mega rounds this year of, 50 million, 100 million plus. And so there's a sense in which some things are slowing down, some things are stabilizing and showing strength. And then the other side of it, which we were just chatting about before you started recording, was we're seeing these token launches that are actually going really well. So if you look at WorldCoin, obviously WorldCoin, they had a tiny float, something like 1%, which is maybe, not super instructive, but nevertheless, their fully diluted valuation was like $20 billion, which is absolutely crazy. That's like a Serum style token launch. And then, just the other day we saw Say Network, which is Cosmos based kind of DeFi oriented chain. And that fully diluted valuation of, I think, like 2 billion. And there they had much more. They had something like 15-20% circulating supply. So real price discovery taking place on Say. And so it looks like actually the appetite for some of these new tokens and these ambitious projects is quite high. We're seeing the same thing in, for example, Matter Labs, which is they're the company behind ZK Sync, which is today the largest ZK rollup at TVL. They're seeing tremendous demand. They don't have a token yet, but huge demand in secondaries. Secondary market in Matter Labs is popping off. So there is real appetite. There is real belief that, hey, this stuff is important and it matters. And it's going to continue to be valuable, even though you're seeing this mixed picture on both the engagement side as well as the regulatory side.
Oh. When it comes to fundamentals and use cases for these, and even like your thesis on just crypto being used as a whole, like when do you see it invisibly being used? And say, for example, this video call we're on to be on blockchain rails, for the music streaming from your favorite site to be on blockchain rails, when you play your favorite game to be on blockchain rails, your payment infrastructure. How do you see things through that lens right now?
So I am personally skeptical that we are ever going to be doing video calls over a blockchain, or that we're going to be, if you and I don't know where you live. I assume you live in the US. If you're in the US, I personally doubt that you're ever going to be buying coffee with crypto. Now, why do I doubt this? A lot of what I think crypto is good for is basically providing a floor. It provides crypto is very, very redundant, duplicative form of infrastructure to accomplish things in a way that doesn't require any trust in third parties and gives people total freedom. Right now, if you are fine trusting third parties, you don't need crypto. And if you basically already have resilient infrastructure and you have total freedom, use that infrastructure however you want, then you also don't need crypto. The US is a place where, our financial infrastructure is pretty good. It's not perfect, but one thing that we learned from looking at the history of financial infrastructure is that you don't go from pretty good to perfect. You go from pretty good and you stick there, you stay there for a very, 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 very long time until there's something that's so much better that you have to go and are forced to upgrade because of the gains that are available to you, right? So if you look in the US, even after COVID, we still use, big pieces of plastic that we carry around in our hands. And we've been using that for decades now. Now, if you go to Asia, most countries in Asia basically leapfrog credit cards entirely, right? In something like China, a credit card is kind of a weird ornament. It's like, why do you have this thing? You'd really only use it overseas, right? You would not use a credit card in China. But in the US, the thing about credit cards is that they're sort of good enough, right? They're not perfect. Yeah, it would be slightly nicer to just get your phone and do a thing. But it's like the credit card has the chip in it and you can kind of, scan it, well, we've done little things at the margin, but we kept the fundamental affordance of a credit card because it's good enough. And I think that's what you're very likely to see with crypto. There are a lot of places where the dominant form of payment is not good enough. The dominant form of payment is terrible, or it's very inconsistent, or they enforce very tight capital controls on what currencies you can own and what you can use to pay for a cup of coffee. Those are places where I think you're going to see crypto seep into people's everyday lives. But in a place like America, where I have a credit card, I also use my phone, tap to pay sometimes, and they're both pretty good. Like, they're not perfect. There are times that I complain, but for the most part, the activation energy is not high enough that I would go out and start adopting a QR code based payment system. It's just not worth it to me, and I think that's true for most consumers in the US.
What other opportunities would you say are most ripe for disruption right now and that are fragmented, need this 10x improvement over that would be the first to be, on crypto blockchain rails?
So it's a little bit boring of an answer, but I remain most bullish on financial use cases. I think, finance and money is one of the oldest systems that we have. It was, a lot of the stuff, like the international payment system, was basically built 70 years ago and has not changed very much since then. It's kind of been backported, and more hacks and kind of, addenda have been added to it and bolted on in different ways. So it's this kind of gigantic ball of spaghetti, and it sucks. And everyone knows it sucks, which is why it costs so much money to send money overseas, which is why it's so painful that you can't send money at 7 p.m. Eastern time, or you have to wait through a weekend and blah, blah, blah. Like, this kind of stuff in 2023 is crazy. It is absolutely crazy that, when it comes to, there are generally two categories of payments where I think crypto really excels. The first is macro payments, and the second is micro payments. The very, very big and the very, very small. Those are places where crypto really outshines anything that we have currently in the traditional financial system. And then, of course, you've got things like real world assets, being able to tokenize different things that are very painful to settle. One obvious example of that is Figure, which is Mike Cagney's company that does basically mortgage origination. Mortgage is the most old school, the most antiquated, the most slow, the most painful, the worst data, the least digitized, absolutely horrendous industry, and horrendous standards about how things get done. And just being able to digitize that stuff, make it transparent, make it auditable by default, is a huge win. And I think you're going to see that happen to more and more parts of the economy, both in the kind of traditional, tokenizing traditional assets and making them available to institutions and making those kinds of workflows more efficient, but also taking those kinds of assets and making them available to anybody, anybody with a mobile phone from anywhere in the world, being able to take their local currency and turn it into USDC or turn it into treasuries or turn it into, a tokenized S&P 500, et cetera, et cetera. That I think is the big vision that I'm excited about over the next 5 years.
I talked to several VCs, and you've brought this and now it's been discussed multiple times. I come from the world of PIMCO when we were dealing with bond trading and even the back office at a hedge fund. The settlement of these mortgage-backed securities takes a lot of time. And during that time, it could actually be monetized. And so you don't even have access to that, ABS till much later. And crypto can come in. If you can streamline that operations, it's a perfect use case for itself where you would get trading liquidity. People would be able to invest in it and just with this fragmentation. But wow, that's exciting to have it validated by multiple people that I respect in this space. So nice.
Yeah, absolutely. I mean, all these systems, like, why do they take weekends off? Why do they take, why do they shut down at 7 p.m.? Right. The answer more or less is that these were designed in an era when there were human beings who had to literally move around pieces of paper and sign them. There are no human beings anymore. These things are all done by machines, but why are we still beholden to this human-centric vision of how these things should be done and adjudicated? And so I think that that's the first and most obvious thing, is that by default, crypto is not human-centric. It is cryptography-centric. And cryptography can be wielded by humans. It can also be wielded by smart contracts, by AIs, by other organizational structures than just one human being has a key. And that, I think, is also going to be a big step change as we enter into the era of AI and more complex kind of agents that are interacting with us humans in the real world. AIs are not going to have bank accounts. It's hard enough for a foreign national to open a bank account. How hard do you think it's going to be for an AI to open a bank account? They don't have a social security number. How do they pay taxes? None of the laws that we have created are ready for the concept of non-human agents acting in the world. But crypto doesn't care. It has no opinion. It is a completely neutral financial substrate. And so the first way that AIs are going to be negotiating with each other and solving problems in digital spaces is going to be with crypto and with their own ability to manage private keys.
Wow. This was fantastic. Where's the best place for people to follow you? Just, kind of stay in touch.
You can just find me on Twitter. Just Google my name, Haseeb. You can find me on Twitter. I just learned recently that I'm now the top ranking result for my name, which somebody informed me of yesterday. But so if you just type Haseeb, Haseeb, you will find me, and give me a follow on Twitter and reach out.
Love it. All right, onward and upward. Haseeb, thank you for your time. And thanks for listening to this podcast where we share insights from valuable thought leaders who really share what could be the future for just a better world. So thanks, Haseeb.
Thanks for having me, Jeff.
If you like that interview with Haseeb, subscribe to our YouTube channel where we share valuable thought leadership and insights from crypto VCs, founders, business executives in the space that are all trying to push Web3, blockchain, and NFTs forward. We also have free resources on our website, like a list of the top VC funds. And if you're looking to grow your company, please contact us at Crowdcreate and see how we can help. Thanks.